Hello YouTube, hello everyone. I am Chris. I run Elliott Wave Cafe. Welcome. It is Wednesday evening here. I'm in Madison, Wisconsin, recording from a different location than usually. But yeah, I've promised that I was gonna try to cover some stocks for you guys. Maybe every single week, and I'm asking Twitter and YouTube and just traders in general to kind of let me know what tickers they would like me to cover. If I can offer some input in the markets, I'll be happy to do so. So I've received a few requests. We're gonna go uh, and you can see them in here. There's basically the semiconductor index. We're going to take a look at Disney, GBTC, Coca-Cola, Pfizer, TDOC, and this energy fuels. I think I'm covering everything that it was requested. Now, even if you're not interested in these stickers, I think there might be a couple of things to pick up from this presentation. So try to stick around and see if you find it valuable. So don't forget to subscribe and like. Check out. I'm sorry. The rest of my YouTube gallery. You're going to find a lot of interesting things in there regarding Elliott Wave and charts and direction of the market, suggestions, stuff like that. So anyway, let's begin by taking a look at the semiconductor index, SOX. And I usually like to start by looking at the monthly time frame. Just gives me a quick overall look at where we are, where the trend is, where do I want to be, how does the picture look. Obviously, I'm not trading the monthly time frames. Very rarely, I would hold a trade, let's say for years on end. You'd be very lucky to see me, or I would be lucky, to buy stock, somewhere up here, let's say in 2016, and then hold it, even 10 years later. I tend not to do that, but either way, I think it shows you a clear uptrend. Let's take a look at what's going on in the weekly. And we had a pretty decent move in here since the beginning of the year in semiconductors. In the room that I run, with the members and the clients out there, we've enjoyed some nice moves here in the semiconductors. Now, I think they're taking a pause. So if you take a look at the, just a clean 5-year chart with just a simple 30, week moving average, you can see that we are in a little bit of an uptrend, right? Since the end of 2022, we're above this 30-week, and we're just kind of pausing a little bit in this uptrend. We took almost all our profits actually, in the triple leverage SOXL ETF that we run. Up here at about, if you look at it, it was about 23 or 24 when we got out with the last of the position. So I think, we're pausing a little bit in here. But the count, which you're not going to see in here, it's basically very simple, I think, just a 1, 2, and maybe even another 1, 2, followed by maybe a larger move developing here in a larger third wave, followed by some fourths and some fifths waves moving to the upside. Now, it's not that easy in Elliott Wave, right? You don't necessarily get all the time the patterns to be perfect, that third wave to be, ideal at the 161.8 multiple, the second wave to retrace exactly 61%. Real life, it's a little different from what kind of the books are teaching us, but ideally we want to try to stay, and try to take advantage. If we see a correction, then we know, hey, maybe there's an impulse coming, so let's take advantage. And that's what we did with the SOXL trade here as well. We looked at this and I said, no, it looks kind of a flat. It comes back into the 30-week moving average. It leaves some tail on the charts. I think that could be a decent trade. Let's give it a try, and that's the best you can do. So near term in here, I think we're going to pause. We came back into this area of resistance, and that's right up there, right at about 36.57. You can see that that's been happening in 2021, then a little bit early in 2022. So now the market remembers that zone and just stops a little bit. So we could get some backing and filling in here, maybe retrace a little bit, come back, maybe towards 3300. And while well above this 30-week moving average, I would consider you to stay bullish, maybe get involved back when you're back towards 3200 in support. If this moves looks nice and corrective, they could give another opportunity. But overall, I think this should continue to trend upwards, and eventually we might break above that 4000. So that's my very simple, just kind of clean outlook in the semiconductors, right? We want to stay bullish on them, but at the moment I think they're a little bit frothy. maybe a lot of people kind of got caught up into buying them up at the highs, and now we got to correct a little bit. And I think we'll get a chance once again to kind of trade it to the upside. But I don't think that chance is necessarily right now. So, but overall, I'm still pretty positive. Let's take a look at Walt Disney next. Again, start with a nice monthly chart. And you don't need a lot of technical labels on this chart. I mean, you can see clearly where Disney has kind of sold off to, and why it is that it's still holding above this 85 level. And if I take this inspector line back here, you can see that you have multiple support levels starting from 2015 and 2016, going back to 2020, and then since 2022, again, just a massive support that kind of stretches if you want to be kind of clean. I mean, if I leave the line here, you can see how this closes, like right there, right? And if you look to the left of the vertical line, I mean, look how nicely those candles just kind of touch those levels. And then to the right of it, you can see how basically here you haven't really closed below those levels, right? So that is something that the market wants to do, that remembers, and that's why these levels are so important. Now you came back a little bit below, and you're actually basically back into this support, and you still haven't been able to break 86.67. Now, what does this mean? Is it time to buy Disney here? I mean, in my view, it's dangerous because, you're at the support, so you have a very small risk reward. If that's how you trade, then maybe that's the right way to do it, and just make sure that below 85 you're out of there, because then you can actually continue to crash towards 75, 70, or who knows where this thing is going to go, right? Nobody actually knows what's going to happen to Disney, and where the disaster might strike, for lack of a better word there. But they just sign up some deals with Apple, so maybe they're going to come back. But so far the chart, it still seems to be struggling. So the moving average in here is still pointing lower. There's multiple upside levels that haven't been cleaned up yet. It's still, so I think there might be a decent opportunity here, but in my book, I would wait until it would maybe break back above 100, maybe above 105, and then, give it a chance to kind of turn a little bit. Take some of these swing highs, you got to wait another, 10, 13 bucks, let it recover a little bit, and then, then wait for a little bit of a retest of that moving average. And that could create, I think, a better just a better setup overall and a little bit less risky. Now, in terms of kind of declining, yeah, you can look at this as being a 1-2. So first decline in a wave 1, then up in a wave 2, then you have a 1, 2, 3, 4, and 5. Maybe there is another 4 and another 5 forming, or maybe we're done. Maybe I'm screwing some of these, labels out. Probably 1, 2, 3. This whole thing here is a third wave. So let's do that. Let's just go 1, 2, 3, deep 4, and a 5, and you're done. That could be the thing. And then inside here, you just kind of have to look. Maybe that's again, 1, 2, and then you have a 3, a 4, and a 5, 4 and 5, and you're done. And now maybe that's a wave 1 or a wave A, B, C for a wave 2 or a wave B, and then you're looking for that. Right? So it's a pretty deep move. It's nice and in 3 waves. Doesn't look that bad. But just because of the way that this looks, and with the possibility that this could still be some kind of a fourth wave or I still, in my view, I'd still would want to wait until maybe this 100, 105 gets taken up. I'm willing to kind of give up some gains here if it moves all the way up there, for a bit of a safety, to assure me that we're a little bit further away from these lows than where we are right now. I think we're still kind of dangerously close, but great support. So if again, I'm going to repeat it one more time. If this is how you like to do things, then so be it. And just, make sure that below 85 level, you want to be out of there, because things can start to deteriorate, and then you can pay the price. So, but again, it's not a bad looking chart, but I would want to wait a bit more on it. Okay, now a great Bitcoin, a grayscale Bitcoin trust, a little bit of a double top up in there. We had obviously a massive sell-off along with Bitcoin. Came back into, again, just into important support levels back here. Just, you could say that's a decent zone. And the market is trying to recover. And maybe this bear market, it's over. I did talk about this with the clients when GBTC was actually doing this, and that was the much better setup, because you basically had your left shoulder, you had your right shoulder, and you had your neckline. And when you see stuff like this forming, then my yellow lights, my red lights, start to flash, and it's like, oh my goodness, there's a straight setting up in here, and then you have a neckline. And then it's the initial breakup, right? Which could stop, like the way this one did, or it could continue to go. Nobody really knows. Usually, you get a retest of that breakdown. It seems that that's what might be happening in here. So you have, a break above these levels, a push up, and a retest. And maybe the market will do that. Maybe it will break lower. Nobody knows. But back into the level, back into see there is this and it's very simple, right? There's a difference between analyzing price and markets and trends, and trend lines and levels, right? And then what you're going to do with that information. Where does that information become valuable to you? We can count it in multiple ways. Elliott wave people argue a lot about, it's the flat, it's this and that, it's this level, it's that level. But in the end, what are we using that for? We're using it to see where we're going to put money to work, where the odds are in our favor. For example, here you could say, well, if this is a 1, 2, 3, 4, 5, and that's a 5-wave move up, you're coming back into a little bit of a pullback. You're retesting this $12 zone. That could be a decent trade. You're coming back into the 150-day moving average. Hey, that's a 30-week. Why not give it a try? And if it breaks below that level, the hell with it. You get out of there, and then you wait for the next opportunity, and at least you're risking a little bit. But maybe there'll be another B and another C in here. So maybe if this is a second wave or a B wave, maybe it's a little bit short. If you're looking at this entire move as a finished impulse, maybe that's a bit short. Maybe it's going to do something like that and extend a little bit more, which doesn't change a whole lot the picture. Now, if you start to break below these levels, then things are going to start to look ugly. So realistically, below 10, I would not really want to hear about it, right? I would be like, I don't know. It would have to be such a nice clean ABC, that I would kind of maybe get excited. But even then, I would start to look for some kind of a reversal first, and see if we can climb back. But again, it's better here than it was up here, and it's probably going to get even a little bit better. I do like the setup. I think there could be something here. So GBTC, you can see what's going on here with SEC, and Bitcoin is still struggling to kind of pick up steam. I just kind of finished the video for the clients talking about BTC and ETH and a lot of the other stuff. But I'm still in a kind of waiting mode when it comes to Bitcoin at the moment, right? It doesn't excite me all that much, although it tried to kind of climb a couple of $1,000 yesterday, but it wasn't. It looks like we have no follow through today, which is a little bit concerning. So that's GBTC. Let's take a look at Coca-Cola. I mean, that's a big stock, right? We have a 260 billion market cap. Who doesn't drink it? I mean, it's not like these guys are going to disappear. It's been in an uptrend forever. I don't see it necessarily, crashing in any way. It's just maybe it's going to get its temporary pullbacks in here. It's a slow moving stock. There probably is a flat at the moment in here. You might say that, hey, maybe this is a 3-wave decline. Let's see if I can, give it just a little bit of for drawing here. Maybe that's an A, B down in C of a wave A. It's an A, B, C of a wave B. And then maybe that's a C wave of a flat. And then we go back to the upside. This whole thing, it's probably, who knows, maybe it's a second wave and Coca-Cola goes from 65, continues to travel up towards 100, as years pass by and we get older and, our kids drink Coke and, whatnot. But this is a signature product. So it did have a little bit of an inverse head and shoulder in here. It had a little bit of a failure, right? It tried to break. I mean, that's pretty clear. I mean, you've had this one right there, right? That's the line, and then you had another one right there, right? So that's a bit concerning. Now it's below the 30-week moving average. It's kind of flat, going nowhere. So to tell you the truth, in terms of trading it, in terms of doing anything with it, to me it's a flop. It's nothing there. It's just kind of, just not doing much. So I'm not really interested until reverses from here and start to attack the highs again. Then I'll get excited. But right now, it's a whole lot of nothing. You can do several interpretations on it. And again, I don't want to long it. I don't want to short it. Probably a flat, but it's early for that to kind of be complete. You could argue that, hey, maybe this move was done here. And that's a wave 1, and that's an A, that's a B, and maybe that's a C. And, the flat is over, and we're pushing higher, and we're doing that. Okay, that's fine. Well, the market will show me that because it's going to start to move up higher, right? It's going to get maybe above 64, and if it does, maybe above 63, then I'll be like, hey, let's jump on this momentum and see if we can squeeze, $5, $7, $10 out of this move, and that's going to be it. For right now, I'm still kind of not doing much with that. All right, Coca-Cola. Next, Pfizer. Again, another monster stock here, $220 billion, 4% dividend. Had a little bit of a correction with the move into tech and to the risk since the beginning of the year. And, just, again, it was obviously, it went pretty good up during COVID and all of that. Just a basic channel you can see in here. I mean, I can do it via the annotation tool, or I can just do it here like this. But that's a kind of a downtrending channel. I'm not a big fan of kind of buying things at the bottom of the channel in here. It's possible that it might go towards kind of the center line in here and maybe boost up a little bit. But there's not really a whole lot to kind of hang by. Is that a 1 and a 2? I mean, maybe. Maybe it's you can find out a fib. You don't need me to kind of tell you the fib, but here is where it came from. Here is what it came to, right? Look at that support. I mean, 1, 2, 3, 4. So maybe good risk reward. Get out if it breaks below 36, and that's not bad. You got $3 of risk for maybe, here from 38 to 46, maybe towards the middle of that, towards 50% of this decline. Again, there could be $7, $8 of, if you got 1,000 shares, might not be that bad. So it's, again, it's a decent level. Let's take a look at the weekly and see kind of how it looks. And this is my problem with these things, right? The moment you kind of break below this one, you're in a little bit of a downtrend, right? It's hard because you kind of have to pick these lows, and depending on everybody's style. Hey, if you like to kind of buy in support, then maybe that's a decent chance, just like I've showed you before. If for me, I would want to see this kind of break back above this moving average. I would want to see this moving average turn back to the upside, and maybe even, again, this, let me just kind of take this out of there, kind of clean up this trend line. If you're looking for something that's much bigger to the upside in here, then that's got to happen. We got to get out of this correction. And it's still, it's still fairly early. So, and I didn't look at it much in terms of Elliott wave, but from a simple look, and we can spend a minute on this, it looks like this probably is a triangle. We have your A, we have our triangle, and then we have our C wave. So ABC, another X wave, and then a big decline here. Well, it should be another ABC, and it looks. I mean, that would be a small. I'm trying to look at the complex move. Don't think it looks good. How else could we look at it? The entire move in here to be an A, B, and then down in C. But how is this an A wave unless you're making it into some kind of a diagonal and leading diagonal, and it doesn't look that way. So maybe it's just not done yet, right? Maybe that's an A of a of an ABC, and what we're gonna get is probably a B wave in here, and then another C wave decline, and then you can have your kind of WXY. But it's a little tricky. So again, just to kind of conclude, if you want to buy support, make sure that out before out if it breaks 36. Other than that, for me it's a little bit of a waiting game on this one. All right, let's take a look at TDOC. This is another one that's been a sweetheart in here, pushing higher towards, from $10 to 310, complete collapse. It looks like it's running towards the end of this decline. Now the signs, they're slowly coming in that the support seems to be holding just above 20. Just looking at it, maybe some kind of a diagonal here that's ending. So eventually, maybe from here, maybe from slightly lower, right, we should be getting a move at least back towards 40 in this guy, right? That would be my first target right there, between 40 and 50. You got these levels here, you got the swing highs, then you got another intermediate one back here. So slowly it can kind of get back up there towards 30 to 40, and we're trading 25, so that would be pretty decent percentage return. Let's take a look at the count, if I can count it here live with you guys a little bit. It looks like you have maybe a wave 1, a wave 2, 1, 2, 1, 2, 3, 4, 5. So 1, 2, 3, 4, and maybe this whole thing is a wave 5 is some kind of an ending diagonal. Maybe wave 5 finished back here. And this is a small wave 1, and then you have your ABC. Again, if you're breaking below these levels, I'm not interested. Could be a low entry, risk reward. You don't want to touch these levels. For me, it would be nicer if you would kind of get back here, attack this neckline. This moving average turns higher. Right now, I want to see a pullback like that, and then I would buy it for a move back to the upside. So I think it's got potential, but I think it's still a bit early, right? So you're taking a risk, but it's it's not necessarily the worst chart. It's the damage has been done clearly, right? The problem with some of these stocks is they can do this for a long time, and go nowhere, and who knows, right? What the interest? They're still losing a bunch of money. It's a small stock, $4 billion, and if you want to pick it up, 1, 2, 3, 4 test of these lows, pretty good support, right? So there's a couple of ways. Again, you get involved here with the stop below these levels, or you're waiting for some of these swing levels to get taken out, buy a little bit of a pullback, and then you go. So that's TDOC. So not bad. And then I think this is the last one, UUU. This is energy fuels. I don't know, non-ferrous metals. I have no idea what these guys do. But the setup here is not that bad. The only question is this a fourth wave or is this a wave 2? Clearly, we can see a third wave back in here, right? So maybe that's a 1, 2, 3, 4, and up in 5, one more move. Or 1, 2, 3, 4, 5. No, this whole thing to be a wave 1 and a wave 2, and then you go. Let's take a look at the weekly time frames. Support here, it's at $5, right? If you're breaking that, I think there's a decent chance that you're going to move back towards, what is this? Maybe back towards 348, 350. That would be the next level where things could get a bit interesting. But let's just kind of move over to a weekly time frame and look at that. Yeah, I guess that's a little bit big to be a fourth wave now that I look at it. On the monthly chart, maybe look a little bit better. So let's see. You have, if you're doing this as a 1 and a 2, then you have maybe a third wave in here, a wave 4, or a wave 4 here, and a wave 5. And that's an extended wave 1, 2, 3, some kind of a triangle in 4, and a small fifth wave truncated. That would be the inside. I always look at the insides of the wave 3. You could always start wave, back here, but I don't know. I think this looks better with the wave 2 back there. 1, 2, okay, 3, 4, and 5, and this is maybe again some kind of a corrective move. You come down, W, X, Y, and then another X and maybe an A, B, another C down, and then you go. Several ways that this wave 2 could kind of unfold. It's still sideways. There is not a lot of rush here. There's not a lot of excitement. To tell you the truth, in terms of a trading perspective, I would only try to maybe own it if it breaks that level. This moving average is still kind of declining a little bit. It's kind of sideways, doesn't know what it wants to do. There is a risk that this is a 61.8 retracement and you can break lower one more time, maybe revisit these lows. So it's in a nowhere's land, but I think the larger move should be to the upside still once this correction kind of completes, okay? And just kind of have to be a bit patient here. That's that's kind of all there is to it. And that's kind of how I'm looking at it. Okay. Again, if it tests support back, again that could be a low risk reward, maybe back towards 450, and then quickly get out if it breaks below there, and then you revisit, if it gets towards 350, towards this area back there. So there's several ways to do this, right? There's multiple ways to kind of trade depending on your tolerance, depending on kind of what you like. The world is full of charts and full of setups and interesting things, and some of them are better than others. So you gotta kind of pick them and digest what you like. Like I personally, as a trader, I've gotten a bit more over years, just a bit more cautious. I need to have a bit more, a little bit more confirmation. Sometimes I go aggressive if I see something that I really like, right? So it varies depending on my mood and kind of how I see the market. But again, it's part of the self-development as a trader. But there's multiple ways to do it. So thank you for watching. I hope this was helpful. Don't forget to leave me a thumbs up and maybe a like, a comment, and we'll see you all next week for more stocks. Don't forget to follow me on Twitter, and if you want to check out my services and what I do daily videos there. I have trades, active alerts, all kind of things. You can come and visit me on Substack. The link is below the video, and I'll be happy to have you as part of my team. All right. Thank you, guys, and I'll talk to you later. Bye-bye.